folks, and welcome to the Contrarian Trader. This is Robert Desmond. It is Sunday, December the 6th, 2009. Folks, we went into the last trading week with the Dubai news at our back. I predicted in my last recording that we were going to probably shrug that off and that we would probably proceed higher as we headed into the holidays. And sure enough, that's exactly what happened. Now, let's start this week off. We'll take a look at the weekly chart of the S&P 500. Now, you'll note that last week was the fourth week that we spent around that 1100 level, except it was the first week out of those four that we managed to close above the 1100 level. Now, I would say that this is a bullish event were it not for a couple of things that really stick in my craw. And that's the fact that we're seeing all these topping tails on these candlestick patterns. Now, for those of you who are familiar with candlesticks, you'll appreciate the fact that those little tails on top of the bodies of those candlesticks, that's an indication of sellers above there. So I want to say that the market's going to continue higher here, especially since the fact we're able to close above resistance, which is significant. And we did so on higher volume. That cannot be discounted. But I want to keep a yellow flag on the track and say, you know what? Let's keep an eye on the downside as well here, because all is not perfect on the charts. So let's just be careful. Let's take a look at the daily chart and you'll see the same follow through, same action on the candlestick chart on Friday. You see this topping action. Thursday was very bearish. You had Wednesday, which is like a doji almost, a sign of indecision. Thursday gave way. Were it not for the employment numbers on Friday, a follow-through would have probably been a visit down to the 50-day moving average with either probably in the beginning of next week, but it didn't do so. The employment numbers came out, they spiked the market, and more than likely we'll continue to see a bit of strength, if not a trade sideways in the markets. Now, what's going to be the catalyst for that move? Who's going to be the leader? I have a prediction that it's going to be the financials. You saw since August, the financials have really they've traded very, very poorly. And I've been a big criticizer of the trade in Goldman Sachs. Now, I sent out an alert on Friday saying that we were going to add to our FAZ position, which is a short the financials fund, but we're also going to open up a hedge using Goldman Sachs, using the call options on Goldman Sachs. So we are actually long Goldman Sachs, and we are short the financial sector. Now, that long on Goldman Sachs is going to give us a hedge and protect our position, because you'll see the price performance on Goldman Sachs on Friday was actually fairly bearish. It closed well off of its highs, a nice reversal. I wouldn't be a bit surprised to see it break above resistance here and proceed higher, possibly to this downtrend line, and we may bail on our position at that point if it looks like it's going to roll over, and we'll just be net short the financials. So that's our opinion of what we think is going to happen in the coming week. Now, what could throw a nut into the cog and just jam everything up? If the U.S. dollar continues to show strength like it did on Friday, you have a divergence. Normally, when the market trades downward, you're seeing the market trade higher. Right? The market traded higher in the face of the dollar heading higher, which is odd. What you saw there was a lot of short covering, especially as we headed into the weekend. So I wouldn't look for that to continue. If the U.S. dollar continues higher, I would expect that the markets are going to proceed lower. So just be careful. Watch that U.S. dollar. We are long the U.S. dollar right now, as a matter of fact. We went long the dollar a number of weeks ago. The VIX. The VIX is again, it's a gray area. You don't know which way this market's going to take right now. You have it closed well off of its highs, and it can go either way. So I hedged our positions as we headed into the weekend because I'm not 100% sure which way this market's going to trend. I do believe it's going to continue sideways with an upward bias, But you never know. All it takes is one piece of news to spike that dollar higher, and this market just continues lower. I believe that there are other shoes out there ready to drop. Now, we've seen the RTH, really a beautiful chart on the RTH, having a major adversary of the RTH. I don't know why it's proceeded higher, but it has. But what you saw on Friday and Thursday was some serious bearish action on the RTH, and the selling was accompanied by higher down volume on Friday. So if you see that continue, that leadership that we saw at the RTH is going to need to be replaced. If it is replaced, I think the finances are going to take hold and lead that way, lead us into the new year going higher. But after the first of the year, I'm becoming more and more bearish on the market. So I would strongly suggest that you should begin to siphon off your profits, begin to look to go into to a short position, and stick with the contrarian trader. Please sign up for a 14-day free trial offer. I have other trades that we put on last week. We're very close to the money where we purchased them. I do not really want to talk about them right now. I'll discuss those with my subscribers in our weekend commentary. And everybody else, please subscribe to my channel, and look forward to trading with you in the trading week. If you have any questions, please sign up for our 14-day free trial offer, and have a great weekend, folks. Bye-bye.